Hey guys, David Robinson here. Welcome to the Apartment Investing Journey. I've got a special guest for us today. I'm really excited about getting into his journey and his story. He's a real estate broker in the Austin market, has a great residential business there that he focuses on, and he also invests heavily passively in larger commercial real estate, including multifamily. And so, Jordan Moorhead, welcome to the show. I appreciate you coming on.
Yeah, thanks so much for having me on here, David. Especially love passive investing, so I'm excited to talk about investing in real estate and how I ended up where I am.
So Jordan, as I mentioned, is an active real estate agent, investor, and passive investor in syndication. He loves to help people get started and is focused on growing his team in Austin. Jordan is a big believer in doing what you're best at and finding great partners for everything else. So, Jordan, our podcast is all about the journey. We'd love for you to back up and tell us a little bit about how you even got started in the real estate world, what you were doing before that, and then we'll take the conversation forward from there.
Awesome. Uh, I got started in the real estate world with small multifamily. Started house hacking a duplex in 2016. What I was doing at the time professionally, I was running a fitness business. So I had a number of trainers working for me. We didn't own any space. We rented space from other people, and we did personal training. So we ran small group classes. The trainers did that mostly. I had an admin kind of running the back end. I was in charge of sales and marketing, essentially, and that business was good, but it had a very clear ceiling. So when I started house hacking, I got a real estate license right after that and saw that that did not have a ceiling. Went into that full time about 2 years later. Um, I started investing in the multifamily right away. So my first property was a duplex, and I bought sixplex. Um, After the sixplex, I bought two more sixplexes. Then I bought another 2 unit, then another 2 unit, and another 2 unit. So I only bought small multifamily property for a while. I got into being interested about commercial real estate and particularly apartments in commercial real estate pretty early on. Obviously, I thought two is better than one, or six is better than two. Not, I don't always agree with that anymore. Six isn't always better than two, in my opinion, and I can list some reasons. But I started meeting some people who were doing bigger stuff. They had owned the single families and the duplexes and the 20 plexes, and then they got up to the hundreds, and they talked about why 100 plus was so much easier. And one of my favorite things about the larger properties is there's not just space for one or maybe two people. There could be one or two or three or four running the deal, and maybe there's 20 or 30 or 40 passive investors, which could be me, and we get to participate on that ride and not really have to do anything. So I just got intrigued by that very early on. I didn't get so intrigued by the passive investing until a lot later, but I just saw how larger multifamily was a team sport, as they say. There's so many people could be involved, and it's so scalable, and that's what's attracted to me to multifamily right off the bat.
I love that. And I want to talk in depth about sort of your strategy about investing passively. But before we dive into that, I want to talk a little bit about your real estate business in Austin. Uh, how is your business structured? What do you focus on? Who do you serve in the Austin market?
So we serve investors and investor-minded clients. We help a lot of investors buy and sell normal homes. We also help a lot of investors buy and sell investment properties, and a ton of people get started house hacking. Our majority of our business is investors or house hackers. The other small piece of our business, let's say 20%, is helping investment-minded clients buy and sell personal residences. We do a ton of that. All the agents on our team are investors, and all the lenders we work with are investors. So we really try to keep it all very holistic. Hey, we work with property managers, we work with contractors, we know investing because we are investors. and we talk to that person and can handle that very well for people.
So, what caused you to focus exclusively on investor clients? What was it? Was it just sort of natural for you because you were already? I mean, that's what you focused on personally. You were buying a duplex, buying a sixplex, but from a brokerage perspective. A lot of agents, even if they've bought like a duplex or a fourplex and they're investor minded, they'll often just go in and start doing traditional residential, retail type stuff. Has that been a strategic game plan for you from the beginning to focus exclusively on investors?
Oh, yeah, absolutely. It's what I'm passionate about. I really enjoy it. Yeah, and working with investors is not always the easiest because, of course, we're trying to find good deals. We're not just trying to find a house. Nothing is easy right now, but investing can be just as difficult as anything else, maybe more difficult. But in the beginning, I had what I would think is a lackluster experience with agents finding my first property. And the agent that ended up actually helping me find my first duplex did a great job, and he essentially found it for me. Um, but I just saw that there's so many ways this could be done better, and I still look at that in that lens every day of, hey, how could we do this better? I don't like good enough. It just it's good enough, but how can we make this just the most amazing experience ever for our clients? And we're always trying to improve that every day. Same as we're always trying to improve things for our agents every day. If I can make things easier and more streamlined for agents, they can just go say, hey, I got to click a button and this is exactly what I have to do here. So I can go help this client better. I'm always just focusing on improving our systems to better serve an investor client, because I believe in real estate for long-term wealth and passive income, and I want to help other people do that too.
And do you focus almost exclusively on the Austin market? Is that the greater Austin market? Is that where you guys focus at this point?
Yeah, we're only in the Austin metro right now. We
Okay.
do still, I have a connection in Minneapolis, Minnesota. I'm still licensed in Minnesota. We still help people buy and sell properties in Minnesota. That's not my main focus. We will branch out as we get bigger, but right now we're just in Austin and Minneapolis, Minnesota.
Okay. And if let's talk about first what an investor would experience in working with your team. Number one, how do they usually find you? And then two, what would the experience be like once they do find you?
So they generally find us through a number of connections. Referrals are huge. We get a lot of referrals of people that saying, "Hey, work with these people. They're great with investors." We're all over sites like Bigger Pockets. We have a podcast. We have an active YouTube channel. We host a pretty active meetup here in Austin. We're doing lots of investor education and investor networking events, and we're just out there trying to tell people how you can actually invest in Austin because there's always a naysayer that says, "Oh, well, you can't invest in a hot market like Austin." Going to real estate conferences, you just hear that about every market anymore. Oh, you can't invest in Utah, or oh, you can't invest in LA. I sat at a table with a guy from LA this weekend. He talked about the hundreds of apartments he owns in LA that do very well. You can invest in any market. You just have to figure out how. And that's what our podcast is focused on. Um, Once they get in contact with us, our first steps are really figuring out who they are and what their goals are and what they're able to do to get there. So we don't start with the property or what kind of property you're looking for, maybe like a lot of agents or teams would, but we try to figure out who's the client, what are their goals and what are they able to do to get there. Maybe you can't house hack or don't want to house hack, but you've got enough money to do it. Or maybe I talk to a lot of people who call me and say, hey, I've got 300 or 500 or $600,000. I don't want to do any work. I just want passive income. And I'll refer them to syndicators I know. I'll say, hey, this probably isn't the best idea for you. You want to go find somebody that's going to do all that work for you, and you're just going to receive a monthly or a quarterly email. And there's not a wrong way to invest in real estate. There's a way for everybody, but depending on what your resources are and what you're willing to do, there's definitely a right way for you.
Yeah. And then let's talk about the agent side. My understanding, you started out as a solo agent, individually focused on helping investors, and then you started to grow a real estate team.
Mhm.
Tell us a little bit about that growth, why you decided to go that path and bringing on additional agents, and how you support agents in that role.
So I think generally the first step was, I was working 8 o'clock in the morning to 11 o'clock at night as an agent, doing a ton of deals. I was the rookie of the year, first year I worked as an agent. I did a ton of business myself, but I eventually realized that I couldn't help as many people on my own as I could with a team of people. And then the quality of helping people would go down too. So if I'm just stretched way too thin, yeah, I'm going to have a great admin, a great transaction coordinator, but I just can't be everywhere at once. So until I really learned that, I was stressed out. I was stretched too thin. I was not in a good spot. Once I started to grow a team, I was able to present all these great opportunities to other people. In fact, we just had a team lunch with a gift card that one of the other agents that I got started on my team in Minneapolis gave me 2 years ago, I want to say, just as a thank you for Christmas for helping him build such a good business. And that's what I'm really passionate about now is helping other people build great businesses. So as an agent, you are a business owner of sorts. And if I can help somebody get started and go from making, let's say, 50, 60, $70,000 a year to 110, $120,000 a year, and also realize the power of investing in real estate, I can just change somebody's complete trajectory. And then they're going to go out and help so many other people change their trajectory in life. That's really rewarding to me anymore. I don't want to be the top solo agent in the brokerage. I don't care about that. I want to be the best team in the brokerage and help the most clients and help the most agents develop their careers and develop their own wealth and net worth.
And at this point in time, how do you attract agents to your business? Is it from the local brokerage that you're a part of, that they sort of see what you've done and that you specialize in investment property and they're an invested minded agent, so they are naturally attracted to you? Do you actively recruit to your team? What does that look like?
So I wish it was easier, but it is, actively recruiting, keeping the door open, always looking for opportunities. Um, you mentioned earlier, just a second ago, we are very picky that the agents on our team do need to be active investors. And I can see the perspective of why that might not be fair. Say, hey, why I have to already be an investor before I can be an agent on your team and learn how to be an investor? And it's just very important to me that people working with all of our clients who are investors themselves and are able to speak to that client on a personal level, understanding what they're going through. So yeah, it's already hard to find the right agents for your team. It's even harder to find the right agents for our team because not only are we looking for this person that's investor, we're also looking for somebody who's the right agent. So we do all the normal hiring. We have personality assessments. We do multiple interviews. We sit down with people. We get to know them. It's a process, but I think it's worth going through the process to find the right people to bring on the team that can help our clients, because that's so important to me that our clients are taken care of just by the very best people out there. And I really go to all the links to do that. Yeah, it is active. It's a mix of active prospecting and really just keeping the feelers out there all the time. Um, I'm never going to not be looking for people. I think any business owner's smart to never stop hiring. You're always hiring. You're hiring somebody, whether or not you know it or not. You're keeping the door open for the right person to come in.
Yeah. So I want to shift gears just a little bit and let's talk about your passive investing.
Hmm.
Um, you mentioned that you were sort of introduced to the concept of, investing passively, and then you didn't really take action on it for a while. Eventually you did.
Mhm.
What do you remember back on when you placed your first passive investment in a syndication? What was that experience like? How did it come about?
So I was in an interesting position just because I knew and got to know a lot of these syndicators so well from being around people that were in the industry, going to industry events, conferences, etc., for a long period of time before I started passively investing. What it felt like, it just wasn't so big of a deal to me to do the first one because I didn't have the money when I started going to these conferences for one. And I just like real estate. I like multifamily, and I wanted to get to know these people. So, I went to my first passive investment was with Ashcroft Capital, Joe Fairless's company. I'd gone to their event several times. I'd seen Joe speak. I'd met Joe. He's a really nice guy. He obviously operates with integrity. He'd seen a lot of his deals go full cycle over the years, and they just have such a streamlined, easy to use, and easy to understand platform they have going on there that not to mention they have lower minimums. So, so it wasn't too nerve wracking to get into the first one. I really encourage people, especially people closer to retirement age or that just aren't going to get into active real estate investing. Let's say you're in your late 30s, early 40s, and you're not interested in getting your hands dirty and you're not interested in managing rental properties. Like, go do this. There's so many reasons to go invest passively. It outperforms the stock market. It has tax benefits. You get cash flow while you're owning it. It's just such a better investment, in my opinion. And yeah, it's cool to watch things go up on your phone and the stock market's doing good. But when we're recording this podcast, January 25th, 2022, the last week has been a bloodbath in the stock market. Prices don't go up and down that quickly with passive investments. Like with Ashcroft Capital in particular, I get an email every month that says, hey, projected returns have been hit. Here's your monthly deposit. It'll be processed in a few days. Here's what's going on with the apartment. Here's what we've done. Here's where we're seeing rents go. Here's where the occupancy is. Here's where we expect it to be. It's really easy to understand that kind of stuff. And a lot of syndicators do this exact same thing. But I think something like their syndications was a great place for me to start because they have their systems and processes together so well. It's a big company. They do a lot of deals. There's always a deal out there to do or a fund they have to invest in. And it wasn't nerve-wracking at all. You have to $25,000 minimum, pays out like clockwork. Yeah, I think it started paying out the second or third month I was in it. Just great.
Yeah. Have you branched out beyond your initial operator that you were investing with?
Yeah, so I've got two investments with Ashcroft Capital, one in Tampa, one in Dallas, which has been interesting because you get to see the differences between the Dallas market and the Tampa market. I love Texas. I'm in Texas. Florida's rents have grown a lot quicker than Texas this last year. The freeze in Texas that we had last winter did not help leasing and remodeling and a lot of other things. So the project in Tampa has done a lot better. I've invested in one here in Austin with Bruce Peterson. He calls himself the apartment guy. Dryfield Studios, that's just a bit north of me. And then I've invested in one in Memphis with Todd Dexheimer, who actually is one of the first people I met in, well, I would say he's probably the first person I met in the larger multifamily space. I met him in a pizza parlor in Minneapolis, St. Paul, real early on, about 5 years ago. And he was asking if anybody wanted to go to a conference. And I said, I like conferences. And ended up going to a conference with Todd. That's how I got to know Todd. I try to say yes to opportunities when they pop up because you never know where it's going to take you.
Love
And I've
that.
invested with him, and he's got some great projects going in Memphis. I will absolutely invest with him in the future. I would say everybody I've invested with and I'm sure we'll get into this, it's mostly been about the operator or been about the person, not as much about the project. And I think that helps me sleep at night too.
So that was you led me down the right path here. The next question is really along the lines of, the what I would like to start with, which is a little bit twist, but how do you determine placing equity with a passive investment versus buying another, small multi in your backyard? How do you determine when it's appropriate for you to do that and not?
So I think for me, I'm in a different position. I figured out how to partner and how to buy a lot of these smaller investments, not using my own capital. So that leaves me open to invest passively. For me, how do I determine what to do? My first thought always is what's my highest and best use of my time and what's going to allow me to best serve our clients and grow my business. If something is going to cause too much work on my end or take my focus away from where it is, I generally say no to it. That's why I love passive investing. I can focus on the business and really easy.
So is it fair to say then that you're not unlike what we would call a high income earning busy professional? You just happen to be a broker. The profession that you're part of is brokerage business, and you
Mhm.
earn a good income from that business, and then you deploy that cash that you earn from that job, so to say, that profession, into cash flowing real estate.
Yeah, but I think a lot of so people, it's easy to think, oh, you just had a high income. The reason why my business does well is because I focused on my business. And I've made that choice a lot of the times. I've also not made that choice sometimes, and I've seen the repercussions of not focusing on my business. So, yeah, today and anymore, I choose to focus on my business, which can pay me very well when I'm helping a lot of other people. And then I do things that don't take my focus away from that business. I have a partnership. We buy residential properties. It helps that we're splitting the workload there, so I'm not taking my focus off my business to go chase houses and do the rehab all the time and make sure things are going right. I said in my intro there that you read, I like to find people to be partners so I don't have to do all the work, and we can split the workload and we can make things beneficial for everybody, and I keep focused on my business.
Yeah.
And again, that's why I love passive investing. I think everybody wants to go out there and actually do it. I hear so many people that say, well, I want to be a syndicator. And it's like, how about you just come up with the next big thing, stick to what you're really good at, and put your money with other syndicators and not have to do all the deals. And maybe you are a great syndicator. I would say more often than not, it's a lot of work. I tried to do it a little bit. I tried to buy commercial real estate for a while. Not saying I won't in the future, but I'm leaving it to the pros right now and I'm just investing with them.
Love it. Man, great perspective. I think it'd be helpful to a lot of our listeners to hear that. So let's talk about the importance of selecting an operator and, and determining where you're going to place these investments. And, I think you already alluded to it a little bit that the operator, having a personal relationship is critical to you deciding to invest with somebody. But is there anything outside of, just a personal connection with the individual, or is that really it? Does it really come down to you feeling like that person on a reasonable level
Mhm.
to determine their sort of core innate values and how they would operate?
Yes, but at the same time, I'm not just going to invest in any deal that somebody I trust brings to me. So I've absolutely turned down deals that people I trust have brought to me. I trust them. I know they're a great person. I know that no matter what, I would get my money back, but I just didn't like the deal. That's not saying that I'm just going to completely overlook the deal. I would say I place the highest priority on the operator, but if I don't like the deal, and the deal doesn't look good and it doesn't check out and it looks like your assumptions are overly generous, I'm also still not interested, even if I think you're the most trustworthy person in the world.
That's yeah, great point. And so, is there any particular criteria that you're looking for that's sort of a hard pass, no, easy, top level, uh, you know, uh, back of the napkin type analysis that you do on the deal that maybe some passive investors could, learn from?
I look at the bigger picture first. If I don't love the location, I don't love the property type, so I passed on a couple office deals in the last 2 years, and I'm probably pretty happy I passed on. Yeah, macroeconomics is the first part. Aggressive rent growth assumptions are the next piece. Anything that's just too much placing the success of the project on either outside things like the rent growth and the market and regulations and all these other factors that you cannot control. Those are all things that I look at and say, hey, if you're assuming this has to happen for this project to go right, I'm just not interested. I've done some private investing in businesses, and I feel like that's more of a gamble, and that's something I can just bet on the jockey. But those have been even smaller amounts of money, and I'm comfortable losing the money if it happens.
Yeah. Great insight. Well, Jordan, this has been a great conversation, and I think it's a conversation that will be helpful to a lot of our listeners. A lot of our listeners come from the small multifamily space or are active investors buying stuff for their own personal portfolios, and are also interested in being passive investors. So it's great to hear from someone who's in the trenches representing clients on buying small multi, has also bought small multi and has built up a portfolio and is investing passively. And I think you've got a great system. I want to start. It looked like you had a thought that came to mind. I'll give you some space for that.
Yeah, no, I absolutely did. I was thinking about this. I was at an event recently listening to a self-storage syndicator talk, and of course, he was sharing some of the returns he'd gotten as a GP. Sorry, hit the desk there. I think it's important to remember that when you're actively running real estate deals, that is your job. And you need to determine how much per hour you're getting paid to do that job. So it's easy to say, oh, I made X return on this 12-plex. Well, you managed it, you rehabbed it, you were out there every day checking on it. Yeah, you made a great return, but how much time did you spend on it? And I think we very commonly overlook that type of stuff. Oh, I knocked it out of the park with this deal, and the returns aren't all the same. So it wasn't the passive investment. Passive investment, the numbers may look lower, but it's very important to remember it needs almost none of your time. If you can read an email every month and you can do your due diligence up front, that's really all the time you're going to spend on the deal. And yeah, the due diligence up front is the most important part. After that, just verifying that everything's happening as it should is pretty easy. And it's just all about what's your time worth, what's your focus worth, and what's your energy worth to me.
Yeah, great perspective. So I want to start winding down here. I've got just a few final questions for you. I know you have a hard stop here, and I want to be respectful of your time. But the first question is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
The biggest challenge right now is finding great staff. And I think this is across the board in every business right now is the requirements of potential employees have just changed dramatically in the last couple of years. And the wage requirements of potential employees has changed so dramatically in the last couple of years. And I think it's easy to forget that when you are working with any sort of real estate project, saying, oh, this is more expensive, it's taking longer, it's not getting done like I thought it should be done. Everybody's dealing with that same issue. So keep that in mind when you're mad about something not happening as it did in 2018 or 19. We're just in a different world anymore with employees and what you have to do to keep business going.
What's something that you're just absolutely crushing right now, that you're proud of, or that's going really, really well that we could all learn from?
I don't know if you've gotten this before on your podcast. I would say my health and wellness is going really well right now. So obviously that's a big focus for me. I used to run a fitness business. I figured out a really easy diet where I just only eat carbs at night and I moderate what I eat during the day with no carbs. I'm down I, I probably 23 weight of 22, 23, so 10 years ago. I'm still relatively the same strength and I just feel great every day. I don't have to work too hard at it. So it took me a long time to figure that out. And I'm in better shape than I was when I owned a personal training business. So that seems pretty good.
That is a great one. I'm glad you
Yeah.
mentioned that. And we didn't get to talk about sort of your experience and the accident you had and recovering from that, but that all plays into your health and wellness. That's probably a podcast for another day. You could probably share a lot about that, but
Yeah.
you were in a pretty serious accident and had a big road to recovery from that. And so
Yeah.
great to hear. You're right. We haven't heard anything about health and wellness, so great to hear. Look, Jordan, this has been a great conversation. I love sort of your demeanor. You're the type of guy that's pretty unassuming, but you can tell that there's a lot going on in your world. And I think you have a great perspective about your business and staying focused on your business and providing a high quality product in the service that you offer to your clients and also to your agents. And then the mindset around really passive investing and letting it be passive, and recognizing that the return profile that you're seeking in a passive investment is different than, an active investment where you have active involvement in the asset management or the property management or the rehab. I think that's excellent perspective. Before I let you go, what's the best way for our listeners to connect with you, learn more about what you have going on, just explore future opportunity with you?
Yeah. So two ways, depending on who's listening and what their preferred way to reach out. The moorheadteam.com, really easy to find me there. And on Instagram at Jordan underscore Moorhead, and Moorhead is Moorhead, commonly misspelled with an E after the R. There's no E. But yeah, I think reach out to me, whatever questions you have. I think a big thing for me in these past 15 years has been just getting around the right people and staying around the right people. I've always been a part of some sort of mastermind. I'm a part of a mastermind called Go Abundance right now, and that kind of stuff just supercharges me regularly. So I've always met with mastermind at least twice a year, and that's just a good perspective to get out of your head and see what everybody else is doing. So if you're not in some sort of group or mastermind, just go to a conference and get out of your head for a couple of days.
Love it. Great advice. We'll have links to that in the show notes. So if you're listening right now and our conversation with Jordan resonated with you and you'd like to learn more about what he has going on, go down into the show notes right now, click on one of those links and connect up with Jordan. Again, Jordan, thank you for sharing your journey with us, sharing some insights into your mindset as it relates to both active investing and passive investing, as well as brokerage services. And I look forward to staying in touch with you and connecting down the road.
Awesome. Thank you so much, David. I appreciate you having me on.